9 millibars was the difference between the cat bond being triggered and it not being triggered. 150 million US dollars or 24 billion Jamaican, 6 to 7 billion US dollars as a conservative estimate. We're talking about the joint strongest hurricane on record, in 90 years. Better to have insurance and not need it than to not have it, but need it.
Hi, Limit Breakers. My name is Dr. Thaon Simms, and welcome to the Limitless Podcast. Joining me is your co-host, as always, Dr. Matthew Preston. Hail to the people, and Matthew.
Hey guys, what's good?
And on this show, we bring true limit breakers here. Today's guest, Keenan Falconer. Hail up the people, Keenan.
Hey guys, happy to have you on. Happy to share insights, and I'm looking forward to an exciting episode.
Excellent.
Awesome.
So for those of you guys who don't know Keenan's an economist. He's helped shape a lot of different things in the island, like shape policy at Ministry of Finance, Bank of Jamaica. He actually earned our Prime Minister's Youth Award, and yet still finds time to moonlight as a historian and a community builder. He became a Justice of the Peace in his 20s. Impressive feat, by the way. And now toggles between like IMF research briefs, late night dives into Jamaican history. Keenan actually turns big ideas into real world impact. He's here to break down some of the numbers behind Jamaica's post-Melissa recovery and possibly show us, where the next wave of opportunity lies on the JSE. We will see. But let's get into the episode. Sorry, and Keenan, thank you for answering your DMs and joining us here. I've actually known you from, I don't know if you knew when we met. We actually met once on Irving Hall. You came and you spoke when I was a student living on Irving Hall. And I think it had to do something with marijuana for some reason. And that industry in terms of like financially and all of that kind of stuff. So I thought it was hilarious. I don't even remember that.
It sounds like 2018, thereabouts.
Yes, thereabouts. Yeah.
Wow.
Okay,
That's
nice.
a long time.
Right?
Giving away.
Okay. We might give it away a little bit more in this episode.
Boy.
But yeah. So I have I was just doing some little research and so on, and I realized you were an amazing performer in CSEC, from 10 CSEC distinctions at 17 to advising now Ministry of Finance and so on. You once said in an article that your study routine involved 3 daily sessions and 0 distractions. Right? How has that early discipline shaped the way you now digest mountains of fiscal data today? And just tell us what do you do on a day-to-day basis?
So let me just say that I am currently a senior strategic analyst at a regional financial services conglomerate. So I work in the Jamaican private sector. I've had experience in the Jamaican public sector, the international multilateral space. I've published academic articles as well. Still in the process of publishing other articles to come out in the near future. So it's really spanned different areas, but early discipline, I'll be the first to admit that I don't see it as such a sort of formulaic approach to the kind of work that I do. You set out your day and you have your hours and your schedule. I just know that I want to get things done. By done, I mean completed. So not just be busy doing things, but ensuring that things are actually finished. And people might say, do you stay up late? And even during exam periods when you study for school challenge quiz, I don't do those sort of all-nighters. I've done it once in university, and at the end of it, I said I'm not doing this again, based on how you feel after. So I've never. I'm doing all-nighters. they sleep in the library and then by 6 o'clock come up and then
Mm-hmm.
you have to leave and then come back 8 o'clock. Like, no, I couldn't make that a regular thing. So
Yeah.
Mm-hmm.
I just ensure, but my approach has really changed over the years because it's not that I am, carving out time for studying or doing work. Although in the regular 8 hour work day, I mean, I don't have that. I'm basically 24/7. So whenever you're on call,
Mm-hmm.
if that looks like midnight, if that looks like 5 a.m., if so the earliest I'll probably start any decent work is maybe 7 a.m. and that can go up to possibly 11, 12 o'clock, depending on the demands. So it's about being flexible and it helps when you are working well remotely, as well as just getting the things done. So I've done that. No, whatever the circumstances look like, as long as you are on the beach, if you are standing in the supermarket line, I fit work around my life, not my life around work. And
Mm.
contrary to popular belief, you can still get your 8 hours sleep. So you get your 7 8 hours of sleep. I make sure that I
Mm-hmm.
do that, and I adjust my times with the seasons. So like now when it's winter, you wake up a little later, and you probably go to bed a little later, and it's the opposite in the summer. So
Mm-hmm.
uh, if I can't get things done in the 16 to 17 hours that I have in a day, then it just has to stay until the next day until you get it done. And
Mm-hmm.
I mean, especially I would say over the last maybe 3 or 4 years, the approach has been very rewarding because I feel like I have a greater sense of direction. It looks definitely different from the early stages of your career or even during university. How it looks
Mm-hmm.
is that I am now so focused that, look, if I'm going to write a 1,000 word article, then that probably takes me an hour maximum because I have pull out the laptop and I just have the thing in my mind. If somebody asks me for some data, that's something I can get to them within minutes. So the learning curve has been steeper. So, and that helps now with the efficiency in doing stuff.
Mm-hmm.
Mm.
Okay,
Yeah,
interesting,
you
interesting. You
said a lot
definitely
of
said some
things.
things. Yeah, yeah, you said a lot of things
Yeah,
that resonated
that
with me.
resonate.
Yeah, like the importance of sleep and just
All
like,
right.
yeah, because I mean, same thing with us and like Thaon, we like, we procrastinated in medical school at times. I'm sure every university student does that. And then, okay, exams coming up and you're like, yo, I know nothing. I need to learn all of this information within a short time. And then like in the earlier semesters, I guess, of med school, I did do the late night sleeping foolishness. Like I used to I used to not I would take power naps. I would literally just stay up and be like, okay, if I'm tired, just take a quick power nap, 30 minutes. I'd look up the time on okay, how long is a power nap should be, do that and just go back again and then try study again and then bam, power nap. And I would just go through the night to try to do that. But then eventually it's like I learned, I was like, wait, this totally makes sense. It's better that I just do it more consistently. I'll get my sleep and I got better grades and better performance while I guess I'd say better health, you know?
Yeah. Preston, I
Yeah.
remember you also used to look up sleep cycles. So there's a thing he used to do where
Mm-hmm, mm-hmm.
there's a point
I
in
still
med
do
school
it.
where
I still do it.
really. So
Yeah, man, I
I
still do
stayed
it.
over his house a couple times during exam time, just during exam period for like a week or two. And there he introduced me to the sleep cycles where if he goes to bed at X time, what
Mm-hmm,
time, like what time intervals do you have to wake up to feel kind of refreshed? And it would be like an
mm-hmm,
hour and a half, or it depends on like the timing and so on. And I mean, I
mm-hmm,
tried it, and I'm the same with you, Keenan. I tried my first all nighter, didn't
mm-hmm,
didn't work out the next day. Like I'm a zombie the next day. So it kind of defeats the purpose. So a lot of what
mm-hmm,
you said resonated with me significantly.
mm-hmm.
But I know
Yeah. Are you
Preston was
someone who
getting
believes in like
somewhere.
pomodoros? I don't know if you ever heard of like a pomodoro.
Uh, that term sounds familiar, but I can't make the
Yeah.
immediate.
It's like a focus session that is like, oh, I think the classic Pomodoro is described as like 25 minutes. So you do 25 minutes of work and then a 5 minute break. And then you usually do, I think, like four of those. And then you'll take like a longer break. So it's like, okay,
Oh,
you focus for a certain time period and then break. I don't know if you have like a time period that you
no,
focus for. Or...
Not really. I think I just adapt and adjust to circumstances. So especially when, the kinds of jobs that I've had, they really stretch you in the sense that uh, you just have to be agile and responsive to different things that happen. So it's very volatile, it's very capricious in terms of things that happen. And so it pulls you in different directions.
Mm-hmm.
But then at the end of it, you grow, you grow through it, and then you're better off for the experience. But
Mm-hmm.
what I can say is that it's not as systematic, in terms of productivity hacks and so on. I think more my things are really task based. So as long as I get it done, and if they say
Mm-hmm.
it needs to be done in an hour, you focus on that. You have other things you push down the line. So, when you measure it by the number of tasks and the number of things that you do and the outputs that you create, then at the end of the day, you can be said to be 100% productive because I can be sitting down for an hour, probably trying to write something, or sitting and doing 4 hours of focused work, and then I don't get anything done, or it's
Mm-hmm.
nowhere closer to getting what I need to get done. So that is really how I look at it. If I'm told that this is a deliverable every quarter, every 6 months, or once a year, then we're going to keep doing the same versions of the document until it's done. So uh, yeah, for me, completion brings satisfaction. So
Mm-hmm.
uh, that's something I've always applied. I mean, I think
Mm-hmm.
about, in the preamble, we had school challenge quiz on the agenda. So even the story behind that, when we won as captain of Arden in 2013, we hadn't won for 13 years. And
Mm-hmm.
Mm-hmm.
when the summer of 2012, which would have been the year before, and I was in upper six, I just had to completely revolutionize how we train. We were falling behind other rivals in terms of the methods and techniques. We were a new
Mm-hmm.
team. I was the only returning player. And for the
Mm-hmm.
whole of summer 2012, it was such a systematic process of getting different matches going back 30 years from then, and just playing playing those matches over and over, 30 years worth of school challenge matches, maybe 600 and odd matches, just simulating them, playing 10 matches a day every time that we train 3 times a week. And the team was so they modeled studio conditions that they were a seasoned team. You would never think that they were inexperienced. And
Mm-hmm.
that was just how that story ended up successfully. And I would say that's probably my first significant achievement, in adulthood. I just turned 18, but the principles of having to just get things done, the things that you say you're going to do, how that looks like in today's life. So, now I have a weekly segment on radio every Thursday at 3:45, where I speak about
Mm-hmm.
the different economic, financial, business stuff in the week.
Mm-hmm.
So that's just something that I get done. If I'm asked to write an article or contribute to something media-wise, I see the value in getting it done. Sometimes you have to prioritize. You can't realistically accept every single thing, but you hope to add value wherever you can. And so, there's a certain diversity in all of the things that I do. It's enjoyable just seeing the product of what you're doing. Even this, when a podcast is produced and an episode airs, that's something that you complete, that people can relate to, they can resonate with, they can find value in it. So it's all about, professionalizing, I guess, to say, content creation, because you don't tend to think of economics and finance people. We have several of them in space, on different social media platforms. But when you take the time to deliberately do something, and you put some focused effort, and you have a fixity of purpose in it, and then you watch back the end product, and you realize we took time to create this thing, and it really added value.
Mm-hmm.
Mm-hmm.
You mentioned school challenge quiz. I was actually in preparing this episode, I was just like writing down some possible like questions and going through some of your articles, and I was at work, and I have a brethren, like I mentioned your name, and he's just like, "Oh, I know that name." I was like, "How you know that name?" And he's like, "Oh, he was on Arden School Challenge quiz," and I'm like, "Yeah." He's like, "Yeah, man, we shelled him in." I think it was 2012. His name's Henry. Ardale Henry. But I know you were like younger and you were on that team for I think what 3 years or 2, 3 years. He was saying. I don't know
Which
how long you were on Arden's team.
which school was that?
It was Casey. It was
Yes.
Casey. Yeah.
Well,
Mm.
I
So
played in 2012. We had lost to St. Jago in the
it's
quarterfinals then, and then we won 2013.
mm-hmm.
And that was my last year. So I played 2 years, but
It's 2 years.
I
Okay.
didn't play before that. So I in my time I didn't lose the case. So
Okay. Okay. Fair. Fair.
my at some point for many years before that, and then
Mhm.
when I was coaching, we had beaten Casey in the semifinals in 2015.
Hot.
So
Okay. The clap
Okay.
back.
Okay. You mentioned something that I think it was you said you work at the Regional Financial Services Corporation, was it?
so
Or
I work
conglomerate?
I work with a regional financial services conglomerate. They are they're listed on the Jamaican Stock Exchange, so it's a local. They have a local presence as well. Um, you know, I mean, I'm not sure that I can, you know, uh,
That's fine. That's
Oh,
quite
so,
all right. We're
okay.
not pressuring you.
Okay.
so I'm in the Jamaican private sector space. So
Okay.
Okay. Nice. Yeah, but I mean, one of the reasons that we brought you on, it's no secret that Jamaica has gone through a major crisis. Hurricane Melissa, Category 5 hurricane. It devastated, a huge part of the island, especially the west side. And, there's a lot of things that have been coming out about different quotes on the damage. And then also a lot of things about all these different insurance packages, and there's all of these different names being thrown around, and it's very confusing. Or I've been, I guess, quite confused by it. It's not something that I think most people, would know. Could you maybe give some more clarity about that, and even just try to break it down a bit more simple for us? Like, what are these different packages? How does this insurance work, and things like that?
right. So let's start from the top. So Jamaica has what's called a multi-layered disaster risk financing framework. So that is intended to um, address different levels of severity of natural disasters and any kind of disaster. So the premise behind it is that you have 5 different layers. At the top is the World Bank Catastrophe Bond, which I'm sure most persons are the most familiar with. And then after that, the second layer is from the Caribbean Catastrophe Risk Insurance Facility. We have 2 insurance policies with them: an excess rainfall policy, which is for water damage, and a tropical cyclone policy, which is for wind damage. Below that, you have what's called a contingent credit claim from the Inter-American Development Bank, as well as from the World Bank. So that, as the name suggests, is contingent on a disaster happening, and then the resources are released. Below that, you have what is now called your disaster fund. So your national natural disaster reserve fund. That is now the fund for all the proceeds of our insurance. They flow into that fund. And below that, you have your contingencies fund and your regular budgetary allocation. So you have regular budgetary allocations or reallocations at the bottom. Now, how they're arranged in exactly that order is that for those instruments that are at the top, they are intended to deal with disasters that are very highly severe but less frequent. So like a Category 5 hurricane. You don't get a Category 5 every year, at least you hope you don't. You hope you will not.
Facts.
But, it's so severe that it happens so infrequently. I think since this data has been measured since 1850, we have had maybe, I think, 12 or so hurricanes, Category 5 making landfall, just to show how rare it is. So in those extreme scenarios, at the top, it deals with high severity, high impact weather events that are less frequent. At the bottom, those deal with the opposite. Those are less severe and more frequent. So, like, for example, your regular rainfall, your seasonal rainfall that causes the occasional flooding, and landslides and the tropical depressions and so on. Those are less severe, but they happen more frequently. So the idea is that the government of Jamaica retains its capacity, its risk. It takes responsibility for absorbing that risk through its own allocations. Whereas our insurance instruments transfer the risk to the international capital markets at the higher end. So the cap bond, for example, it is invested in by global institutional investors. I think there are 15 of them. Most of them are in Europe and North America, because the bond itself, was listed on the Hong Kong Stock Exchange, and it was arranged by the World Bank. So Jamaica pays premiums to the World Bank. They keep it, and the investors, their principal goes to the World Bank. And now, in the event that it is triggered, meaning that the parameters are set, and I'll go into what that means a little later. The parameters, if they are breached, or then the instrument becomes activated. As a result, the payout is then made. So the investors lose that principal amount, which is the 150 million US dollars, or 24 billion Jamaican. They lose that completely, right? Whereas if we have a scenario where the event does not trigger, as it didn't for the first 3 years, when the catastrophe bond was first implemented in 2021 and it expired in 2024, then what happens is that those premiums are now remitted to the global investors in the form of bond coupons. And now that is basically their return for having invested in that bond.
So question, how does the cap bond differ from like a regular a bond that us as investors know that some may be listed and so on, some may not be listed? How does it differ?
So despite it being a bond, it's not debt. So it's not a debt instrument. Jamaica incurs no debt. It's more of an insurance instrument. The bond terminology is just for convenience, right?
Okay.
It doesn't operate like the traditional bond where it matures and then you get back your principal and you get your coupon payments.
Your interest.
It only it has to satisfy the condition for that to happen, right? So it's also differs from traditional insurance. So as an insurance instrument, it is not like traditional indemnity insurance, where anybody who's familiar with, for example, you're meeting an accident or suffer some sustained loss or damage or something, and then need to have the claims adjusters going into the field, and then assessing the damage. If it's property damage or car damage, they assess everything, and then they give you an estimate and say that this is what we estimate the damage to be. The evaluators do that and what have you, and then they take months to give you your payout. If you hope it's months, but what this is now, it's pre-arranged. So the principal amount, being 150 million US dollars, is preset, right? So if it's triggered, you get the money. That's it. If not, the money stays right there. It's called parametric insurance. The parameters in this instance are the wind speeds, more precisely, the intensity of the storm as measured by centralized air pressure, as well as the trajectory that it takes. So Jamaica has a series of grids overlaid the island, 19 of them. 3 or 4 of them were breached with Hurricane Melissa, and each grid has an associated air pressure where the storm, as it
Preston,
passes,
I don't know if you can pull it up for the audience just to see.
So.
Okay, but yeah, you can continue, Keenan.
Right. So as the storm passes through, it needs to breach the grid by having a pressure that is either at or below that threshold. So in Hurricane Melissa's case, the pressure was 890 millibars. It was so low that it was lower than the lowest possible threshold, which I believe was 920. So there was no doubt that the catastrophe bond would have been triggered in that instance. Beryl did not trigger because while Beryl had, the path, the intensity was slightly above the threshold required to trigger the cat bond. And had a cap ban in the past, then Ivan would have triggered it with a 100% payout. Dean would have triggered it with a 92% payout, and Gilbert would have triggered it with a 70%. So, we've had events that would have triggered, but the cap ban didn't exist back then. So this now differs in the sense that once it triggers, you get the money. There's no question about it. The only thing is that it has to be verified by a third party, which had been done last week, which confirmed that it is indeed 100%. Because it's dependent on the number of grids that are breached, as well as the intensity of the storm. Exactly. So we see the figure right there. So through some of those grids, I think it breached grids 3, 5, 6, 11. So based on where the eye passed out. So 11, 5, 6. And so you calculate the payout after that, dependent on what the severity of the storm is. You could get a lesser payout, you could get 90 something, 80 something. We needed just the independent risk modelers to determine that. But there was really no doubt once we saw how intense it was. We're talking about the joint strongest hurricane on record, in 90 years.
Yeah, somebody was actually explaining to me how the central air pressure being low is as a result of how strong, meaning that's correlated to the strength of the hurricane, because it's almost as if the hurricane is pulling the air out from the eye up and over. So that's why the pressure is lower. So it's almost like the stronger the winds, the stronger the hurricane is literally pulling the air out, and so the lower the pressure. And it being below, I think it's below 900 millibars. I think it was 892 millibars.
Yes.
I don't know. Is probably one of the lowest, the lowest pressures that we've seen in. So that's just a testament to how strong the hurricane is. So it's crazy that and it's cool that you said that that we actually set that up. I think it was Nigel Clark is the one that spearheaded that, the cap bond,
right.
from my understanding.
Right.
And I think that was an excerpt, Preston, from his book. Correct me if I'm wrong. Yeah, I think that's an excerpt from his book. I know, Keenan, you reviewed Nigel Clark's Footprints in the Sand.
Right. Yeah. So, I'm on it for the publisher. So, yeah, pioneered that and the multi-layer risk financing framework. So, Jamaica, as a small island developing state, we sort of have to take responsibility for our vulnerabilities, because we know that the international large players in the sector, climate change, they have a big influence on climate change. So we cannot possibly manage the severity and scale of these disasters without this sort of insurance. And it's unfair that we don't contribute to the sorts of emissions that will drive these storms, and yet we have to bear such a significant cost. So we can move into how much this thing is expected to really cost us. I mean, at minimum, the Prime Minister said that it would be $6 to $7 billion US as a conservative estimate. That is for physical damage. So if we're talking about longer term reconstruction, then that will probably take several years, over several budget cycles. And if you want to rebuild more resiliently, that's probably going to take up to more than 10 billion US. Could be up to 75% of GDP, or 16 billion, which is what I had also said publicly. So we're talking about long-term reconstruction, right? And so persons have been asking, so the proceeds of everything that we expect to get, 150 million from the cap bond, our CRIF policies also triggered an extra, I think it was collectively around 120 million. And then our other instruments from the IDB and World Bank is around another 80 billion. So you have basically, you know, in terms of US dollars, that's in terms of all US dollars. When you add up everything and you put it in Jamaican dollars, we have around about 120 billion. And then added to that, then you have some other instruments from the IMF that can be drawn down as well, which takes it up to closer to 300, right? So resources are there. They're not intended to cover every single loss, because both public losses and private losses have been sustained. Then we also have to
Yes.
think about private market insured commercial, residential, and industrial properties. They have their own insurance. Government will be responsible for rebuilding public infrastructure, roads, bridges, hospitals, schools, everything, all of those things. So the proceeds from Jamaica's insurance policies are not supposed to cover the total extent of damage. That's something that the government will now have to do year upon year, make some provisions in the budget until we can fully reconstruct. So when you see a big headline figure like 6 billion US dollars or even up to 16 billion, that's not something that the government is expected to cover in full or even in a year or two. That's year-long endeavor. When Gilbert cost us 6 billion US dollars in 1988, of course that was worth way more back then than it was today.
Mm-hmm.
Gilbert was 37 years ago. Some people had not fully rebuilt, or maybe just only rebuilt after maybe 20, 25, 30 years. So we have to really think long term. Nobody recovers from a category 5 in a year or two, whether economically, in terms of physical infrastructure, in terms of just the devastation that happens. So economic wise now, the economy has become more resilient in terms of the macroeconomic fundamentals all being in the right place for the most part. However, despite the fact that we had recovered from COVID after 2.5 years, call it 3 years, a relatively short period of time compared to previous crises, this time we have to contend with severe infrastructure damage. And, it's not like you could just open back hotels and then have an influx of tourists coming in. No, we have to
True.
think about actual physical infrastructure, and that dampens growth, right? In terms of having to restore connectivity and build back more resiliently. So that's why, in terms of recovering lost GDP output and getting back to pre-Hurricane Melissa levels of economic output, that could take probably longer than COVID. I mean, it could take a year or two, right? But that depends on how well we can execute and implement capital budget spending, which we have not really done very well in the last 3 to 4 years. We've always had an underspend in that area of the budget, and it doesn't really represent true savings to the government.
Mm. So, I mean, I remember seeing you, on certain interviews talk about how some of the funds will be used, and you split it up into like 3 different categories. You have like relief, which I believe the cat bond is supposed to be used mainly for, like that's immediately after, and you talk about recovery and then long-term reconstruction and so on. How do you think we navigate each one of those steps? Because right now we're in that relief period still. It's been about 2 weeks since Hurricane Melissa? 2 weeks to the day. So today is the 11th. We're recording on the 11th of November. Right. So I'm assuming we're still in relief. Just paint a picture as to what those things look like. Like what is relief supposed to look like? Meaning in terms of what do we use the funds for, and what does recovery look like? What does like reconstruction look like? Yeah.
Right. So those 3 distinct periods are just meant to illustrate, the cost requirements for getting back to total reconstruction. So in this immediate period, it could be up to 6 months. We're talking about providing people with relief, but not all of it. So some of it must go to initial reconstruction. So we're talking about the immediate period. Now, why I emphasize immediacy and initial in this context is because these are resources that we would not ordinarily have had. We would have had to reconfigure, recalibrate the budget, which takes time. And that is even if you have space, because no, you won't, right? Revenues are going to plummet because of that fall in GDP. So you won't have those revenues. So you need something right now. So that's what, I have been trying to make. Whatever it is that you want to do right now, whether you want to put poles in the ground and have some concrete filling in somewhere, or just doing regular reconstruction, paying for relief items, paying for some construction items, fixing a few roofs here and there. Those are all things that can be done. It's just that it's for the short term period while revenues are down, that gives you some space, right? That you would not have had, because this thing now has wiped out your space to respond immediately. So that is the whole purpose. You can use it for anything, in the sense that the monies are fungible, right? There's no restriction on how it can be spent. So you can give people a little relief physically here and there, buy them a few items. You can rehabilitate a few things. You can start reconstruction. But ultimate reconstruction and full and total rebuild, will now happen when the fiscal dynamics of the country change. So if we expect to have, for example, a V-shaped recovery, then it means after the quarter, which is this quarter, October to December, we will now see it falling by 8 to 13% of GDP. Then hopefully every succeeding quarter after that will have a higher GDP growth rate than the one before it. So, and then until you get to pre-Melissa levels of output. And with inflation expected to be higher, then there is also the potential for revenue overperformance, right? Because then after that, when inflation declines back to its 4 to 6% range, then the scope for revenue overperformance is limited. So while revenues overperform in the initial,
Can you break that down for us, for the viewers, like why is inflation expected to go up right now?
right? So because the productive capacity of the economy has been attenuated, it's been weakened, it has fallen completely off. And we've seen that with some agricultural prices as well. And that also has implications on monetary policy, because monetary policy, is still tight. It's at 5.75%. I mean, you both and the community listening and everybody wants interest rates to fall down. Sad to say that might not happen. In fact, the reverse might now happen. We have seen where equities have sold off because people want to increase their liquidity, which was completely predictable. And we also have to take into consideration that the influx of imports that will now come in, both for relief items as well as for food, since production is going to go down, might now also wipe out our current account surplus. So we have been running a current account surplus for the last 3 years. And, given that exports now will also fall, then raising interest rates may potentially have to be a policy option in order to stave off Jamaican dollar depreciation. So, it's a confluence of factors that is anticipated to happen on the horizon. It requires very careful management. The BOJ definitely will want to preserve price stability, which is their mandate. So anything geared towards that, as well as trying to reduce that the differential between us and the US, so that the rate does not depreciate too sharply, right? Because that has other implications. Like that will mean that the foreign dollar denominated debt will now go up. And, I think if you go up by 1% depreciation, then foreign dollar denominated debt goes up by around 14 million US. So these are all things. Debt to GDP is projected to rise. We're going to have a total macroeconomic reset. And, that's just something that we have to prepare for. But inflation itself, no, I don't want to make a prediction in terms of what it might be. At the height of COVID, it reached 11, 12%, but it will certainly go above the 4 to 6% range. the Bank of Jamaica had already predicted that for the remainder of this year, it would have been below the range. It has been below the range for the last 3 months.
Mm-hmm.
Because and I think that is more because of the tight monetary environment. You have both, analyzed listed companies and their financials. You see P&Ls. You see that a lot of companies are squeezed in terms of their
Yeah.
profits, and the stock exchange has been down for based on the 5 years data that you can see going back. Both the financial index is down. I'm sure other indices are down. The main index has been down, even though it has stabilized a little bit, but it's not quite at pre-COVID levels. It was
True.
more robust. So people have understandably gotten a little skittish. People don't want to expand. They don't have the capital to sort of you know, pursue the activities that they had planned, and now they're going to have to pivot. This environment of further elevated interest rates, particularly now among a global inflationary environment where you can't predict what the American president is going to do in terms of tariff and trade policy. So,
Mm-hmm.
we're living in a different world. It's different than it was prior to 2020. It has been 6 years, basically, and we just have to adjust to this new normal. It is not going to go back to what it was up to 2019, and just navigating these shocks and these crises as best as we can is going to take a lot of effort.
Mm-hmm. One of the things I'm trying to understand, you explained that we have these different insurances or money like protection, and then we can get the payouts when or if the damage were to occur. So for example, you said the largest one was the category, the cat fight or the cat bond, which I think you said was around 150 million US payout.
Right.
Now that we are in the process of getting the money, or we have got the money, what happens after that? So is it that is now forever gone, and we are now going to have to try to buy another insurance package? Because I don't want this to happen, but just say, for example, in the next few years another great hurricane was to hit us. What would be our protection in that case? Is it that we could renew it, but then this time do you think that we may not be able to get the same 150 million US? Maybe we can only get 100 million US, or only a 50 million? Or is it a situation where we could still possibly get the 200 million US? Because I guess I'm thinking that as an investor, if I looked at this country and maybe I lost some of my money investing in that bond, I may be like less wary, or I may be more wary, like, oh, I don't want to lend to them, or if I do lend to them, I have to get a much better deal. What do you think could play out there?
Well,
That's a good
the
question.
first thing I should say is that we can renew it, because it had been there sitting for 3 years, nothing happened. And then now we renew it for another 3 years. It takes us up to 2027. Unfortunately, though, our coverage would have been exhausted based on this trigger event. So you hope that nothing happens next year or the year after that. But we continue to pay regular premiums. So we pay, of course, those are going to go up. As any sort of insurance type scheme will have that happening.
Mhm.
So premiums will go up. Jamaica can renew it again. There's no reason not to do it. As for whether investors will do it, I think so. I genuinely think that you will have those very high risk investors who are going to do it, because based on the amount, they could give you back 150, maybe they'll give you less, they could give you more. But in the global market for these things, it's a very minuscule amount, because the global market for catastrophe bonds is around 55 billion US, and this is 150 million US. So for large institutional investors who took a hit, that might not have been such an extreme hit for them, right? And given that, you can get any coverage is good coverage. If it was 50 million, it would have been good, because it's not meant to cover the full extent of losses. It's just making sure that you have sufficient liquidity in this period now where you are not expected to have any liquidity, because revenues are going to fall through the floor, right? So it's just about having that money on hand. It could have been 5 billion, right? So whatever coverage Jamaica can get, when they work to the risk modelers, who is going to take on that risk, Um, and not to mention that the reverse is true. So with premiums going up, and these guys are now going to get a higher payout, maybe somebody will be so moved to now invest in the cat bond, knowing that look, 3 years Jamaica did not have this thing happening, and they got a huge payout from us, from our premiums. Now, from 2027 to 2030, who knows what will happen? You know, these investors might say, look, we're going to take a chance, but that's why it's extremely high risk. And in the world of investing, you both know how we speak about that trade off between risk and reward. It's not always one to one, right? So people just have to sit and assess and determine what sort of reward is proportional to this risk that I'm about to take.
That's so true.
One of the things I was thinking about, I'm not sure if you know, or maybe you could ballpark the numbers, or this would be, I think, something that would be nice for the government to show. So, for example, I'm thinking about it like a stock. So, say you put 150 grand in a stock or 150 million in a stock. It's almost like the premiums would have been how much we would have been paying. So I'm trying to like ballpark it. Is it like, for example, maybe over those, whatever, I think you said 3 years, is it like, oh, we paid $10 million in total, which would have been split up either maybe monthly or quarterly or whatever, or maybe annually. And we paid 10 million, but we got 150 million. So people could maybe kind of understand the level of return that we got. I don't know if you know the ballpark numbers on that.
It's not publicly available information. I've never come across it. But in paying those regular premiums, that would be counted as part of expenditure. So unfortunately, the government never makes those things available. Just like how they don't make, for example, asset tax available. It's just lumped together with corporate income tax. So the financial sector has been complaining about that for some time. So I wish I could give a specific figure, but I mean, it's expected to be substantial. The millions, the tens of millions of dollars of US, which is several billion. So if you're going to get a payout like of this size, so we can reasonably expect that it is not an unmanageable amount of expenditure, but it is not insignificant.
One of the things I was even thinking about is before this happened, I'm sure that if you maybe check back in maybe articles or things online, people were actually maybe saying, hey, why do we have this or something like that, But then now look at them, being proven. They'll be like, oh, no, it's a good thing we have this. So, yeah, I'm happy that we were, I guess, forward thinking to do this. I hope that we are able to get more insurance because all I see is that there will be, my view is that it's not whether or not we will get another serious storm. It's really just a matter of when and how we are able to come back from that or how much damage we are able to, sustain.
Right.
Yeah.
So if we could be absolutely sure that we would not get a Category 5 hurricane, there would be no need for a Cat 1. So, but we're not absolutely sure because the probability of that happening is so, whether it's low, it could be very infinitesimal, extremely small. It exists, not zero, right? So for that extremely small risk, you have to have something. So, just that old adage, it's better to have insurance and not need it than to not have it, but need it. So a lot of persons were saying after Beryl, this thing happened and we did not have, we had this thing for just sitting there and it didn't work. Like people were saying, oh, it was the wrong insurance kind of thing and what have you. And, it just was there, but had circumstances been slightly different. Like for example, Beryl was 959 millibars in terms of its centralized air pressure. And it passed through a grid that required it to be 950 millibars. So 9 millibars was the difference between the cat bond being triggered and it not being triggered. So,
wow.
What is 9 millibars? It could have been 8, it could have been 1. The point is, there is always a possibility that something like this will happen. So it's better to have it on hand. So, I mean, the opportunity cost is now, where would I have found that 24 billion if I didn't get it from this cat one? I would now have to try to reassess and prioritize expenditure in the budget and try to figure out where I'm going to get that when revenues aren't going to be done. Where am I going to carve out that amount of money that's needed for right now? So persons can say, it's money well spent because I have the money now and in a difficult situation where it would have been extremely hard to find it otherwise.
Yeah, that's
Because
something
even
I was
think,
also thinking about. Oh, sorry. Oh, go ahead, Preston. Go ahead.
I was saying, like, what if, for example, it had been triggered with Beryl, and then as you
Mm-hmm.
pointed out, it's not like, oh, it just renews instantly. So we would have had that, Beryl was a lot less damage than this. So maybe in a way it's good that Beryl didn't trigger it.
Well, you
You
have
know?
to remember that when Beryl happened, it didn't expire yet. So it would have been under the old cap one and it would have renewed. And if it happened again this year, it would be under the new cap one. So it expires in the December of the year. So this one that expired December 2024, we have had coverage. This one now expires December 2027. So it's for the calendar year, which covers the
But
hurricane
no, but
season.
Beryl was last year. You said
Mhm.
2024, it expired?
Yes, so
No,
it
he's
December.
saying
was,
December 2024 it would have renewed.
Oh,
yeah,
Oh
I
expired
wow! So hold
see.
on, if it had,
first
you're
one.
saying if Beryl had triggered it, we would have got 150 million US. It would have then
Mhm.
renewed end of December 2024, and then if when Melissa triggered it, we would have got an additional 150 million US.
That's right.
Oh
Yeah.
wow! Okay,
Mm.
wow!
So
Okay,
The difference is 8 millibars.
yeah. So it
Wow.
expires in December in order to cover the full extent of the hurricane season because it ends in November. So
Yeah.
um, December 2021 to December 2024, then December 2024 to December 2027.
Wow, I see. Yeah. I mean, you were also speaking about, suppose we didn't have the cap bond and we weren't, prudent to have the cap bond. And I started to think about like what would have happened in terms of where would the fallout or the financing hole would have shown up first? Like, would it have been in like cash flows to the government? Would it be a weaker JMD? Because that's something we also have to think about, higher domestic borrowing. So
Right.
those are some of the questions I was just wondering, like, where would it have shown up first? All
Yeah.
three?
So
I don't really know.
quite possibly. So we have to think about you know the minimizing the disruption to the budget because despite Hurricane Melissa, the government has certain non-discretionary expenses that it has to meet. It doesn't want to fire
Mm-hmm.
anybody. It doesn't want to slow down paying debt, although debt relief is something that the government could explore if it wants. It could also borrow more in the interim. So, it's not to say that there will be no borrowing. It's just that we will probably not have to borrow as much as we would have if we didn't have the proceeds from insurance. So,
Mm-hmm.
what else do you realistically cut? You don't want to cut capital expenditure. So, in the aftermath of crises, the government now has to be counter-cyclical in a budgetary space that now expects them to, um, you know, decrease spending. It needs to do the opposite, and now it needs to do that in capital expenditure, like I mentioned earlier. But just to say that fiscal rigidity is so great that it is virtually impossible to cut certain areas. You pair off a couple billion here and there, but the fallout from this in COVID, we lost revenues to the tune of around 75 billion, right? That's just our revenue loss as it was. That and now, if we have a similar kind of revenue loss, that was back then, the initial decline was around 18%, I think, of negative 18% in terms of the decline. If you were to have something similar now, where 75 billion is going to go down, this effectively cushions that loss by having the proceeds of insurance. Because remember that despite Melissa, um, the regular activities of government go on. So you have to pay for pharmaceuticals. You have to pay judges. You have to pay for maintenance. You have to do those little things, street lights. You can't go without garbage collection. You can't go even though um, you know, don't, you understand the public services that have to continue. So
True.
uh, you can delay a few things, you can stretch out a few things, you can abandon a few maybe non-critical items, but you can't wholesale, you know, just say that the government must shut down just because there's a disaster. So the government will have to. It was already projected to run a deficit. It will now widen those deficits. It will require some amount of borrowing. Debt to GDP will go up, and fiscal rules have been suspended to enable that to happen. So it means that in the longer term, um, hopefully when uh, conditions are sufficiently restored, then debt to GDP falls again when GDP goes up. But for the meantime, we have staunched borrowing in such a way that this was our main buffer. So we were expected to hit 60% next year. But, imagine if we were higher, then we would have had less room, right, to maneuver. It's the same thing with NIR. So NIR was our main monetary buffer. Having $6 billion of NIR is going to be useful now in having to intervene in the foreign exchange market to preserve FX stability. So those are our two main buffers: our fiscal buffer and our monetary buffer. And it's just the fruits, I would say, of sound fiscal management. Because imagine trying to navigate this sort of crisis if your debt to GDP was 100% and now it shot up to 150. Remember during COVID, it was at
Mm-hmm.
90 and it went up to 120, right? So that single event brought it up by 30%. So now if we were at say 100, then going back up to 150 is now bringing us back to square one, where we were before we started our program of fiscal consolidation.
Truly.
Mm.
I kind of want to talk about what happens next on a more like, I guess, a more positive note, because there are industries that have gotten significantly affected. Agriculture, certain infrastructure. Roads are gone. Certain businesses just can't operate. But I wanted to know, like, in your opinion, what sectors that were affected do you think will, I guess, bounce back like the fastest, and which maybe do we have to worry about for years? But I want to focus on the ones that you think that might bounce back the fastest, because I know you mentioned certain industries. There's like tourism, there's like the finance industry, and so on. Which ones do you think would bounce back fastest?
Well, you know, I think, well, I want to say the ones that will uh, be very critical in terms of recovery. So you just think about the regular ones, like anything logistics and distribution related, food, packaging, manufacturing. Think about construction and transport. Wholesale and retail will definitely take a hit as people's disposable incomes go down. Tourism, which is basically accommodation and food and beverages, will also take a little hit. Electricity and water have obviously taken a hit because electricity usage alone is a big part of GDP, and with a
Mm-hmm.
wide swathe of the grid being inoperable, that is definitely an area that will take a little time to recover. Um, you know, uh, Agriculture was resilient; it had recovered. It took a year and a little bit after Beryl, and it did recover, but the recovery might be a little longer in coming now. You look at other areas like mining, regular traditional sectors like mining, finance, I think will continue to be resilient, and that's only because Kingston was spared the worst of it. Um, you look at, you know, anything that is transport and travel operated ought to have a more resilient bounce back. And yeah, those industries that assist more directly in recovery. People will be buying food. People will be going back on the toll that gets charged. People will be, trying to transport things. They will be trying to, um, you know, just get back into buying and selling and just having um, retail activity. Commercial real estate in Kingston is still, fairly resilient and booming. So that will now carry over to the rest of the economy. The Prime Minister had mentioned that of necessity we do have to sort of um, do what we can where we can. So those relatively unaffected areas will now have to just continue to do what they do. So I think any companies, without calling specific names, that operate in those areas that I mentioned ought to be able to be resilient. But just to say that you might have individual companies, yes, but wider market sentiment may not go against the market collectively. So in aggregate, while you're expecting specific stocks to provide an opportunity, you might have a situation where, despite the fundamentals of the company being well, its P&L is well, its balance sheet is okay, management is sound, its corporate practices
Mm-hmm.
are sound. Those sort of things that investors look out for. People collectively may just say, look, no, it's just not a good time to invest, and they might continue to sell off despite what's happening. But in the future, so let's talk about maybe 5 to 10 years from now, if the government takes the opportunity to rebuild the way it does, then you're looking at energy. I think no, when they always say you can never waste a crisis.
Mm-hmm.
Anybody that deals with infrastructure, construction, shipping, manufacturing, logistics, distribution, uh, you know, those entities now that are rebuilding physical infrastructure, energy, water, storage, internet, roads, bridges, though ICT, broadband, and all of those things. When we rebuild, we cannot go back to what we were before. So if there is an opportunity for people now to actually rebuild more resiliently, and companies see that these things are needed, then I think 5 to 10 years in the future, those companies are the ones that will stand to benefit the most.
Yeah, because
Very
I
true.
think a lot of international investors might be looking on Jamaica now and other Caribbean countries and being like, hey, turned off by the risk. I'm hearing stuff about someone told me about there was like a recent hotel that was set up here, maybe probably under a year in operation, and it was severely damaged. So I'm thinking, if you were as an economist, and if an international investor is looking on Jamaica or the Caribbean and is saying, hey, it's too risky. I don't like the hurricanes. Hurricanes will just keep continuing and it'll keep setting the country back. How would you respond to that investor?
Well, you see, we can't really do anything about our physical location. So, we'll always be climatically vulnerable to these events, and they know this. So, I think anybody willing to take the risk has already, in a serious way, has already priced that in, and they're going to do it anyway because the even though that is unchanging, there are other things about Jamaica that is unchanging. So, and this is something that I've had an issue with, in the sense that we have not been able to convert or translate our macroeconomic stability into greater foreign direct investment. And so outside of tourism, it's practically non-existent. And how do you convince an investor to come here and invest in certain areas, outside of tourism? Because you don't see it happening in pharmaceuticals, health, finance, and what have you. And I think that has a lot to do with other bureaucratic institutional hindrances, as well as just the quality of the labor force in terms of its skills and its preparation for the different areas that the world economy is going in. So, to an investor who wants to invest in Jamaica, just do it the same way that you look at a company. Look at the fundamentals. And the government actually needs to be more aggressive about translating those fundamentals into actual tangible investment, because that's the only way you're going to really change Jamaica's long run trend of growth rate. At 1 to 2%, it will take us 70 years to double our GDP, when we need to be growing consistently at three. I wouldn't even say three. I'd say 5, 6, 7%.
Mm-hmm.
Quarter over quarter for a sustained period. That is what's really going to get us out of that rut. So, yes, the location is fine, fundamentals are fine, but government now needs to send a different sort of signal that, look, in this rebuilding phase, we're going in a different direction. So, urban areas and urban spaces, we're talking about completely new towns. And the government already sort of had this idea with urban centers, but no, for most of the West, we're talking about rebuilding towns completely differently, right? Some places, some buildings cannot be in the same places that they were before. Some,
True.
some communities will have to be relocated. Some areas will now have to be just abandoned, right? And then you
Have
start
you
from.
seen the Twitter posts out on content in Manchester and how
Yeah,
the
I
the
saw it.
groundwater has risen? Yeah, the groundwater has risen so much that the whole community is like flooded, and it's
Yes.
like almost like a tourist attraction. Like they set up a pan chicken man out there, and like people come and just look, and it's like a huge pond, but the
Yeah.
people's houses are in the middle of the pond and so on. And
Mm,
yeah, I mean, we should have been. I don't know if it's more strict about people building in that zone because
mm,
it's a known zone as like I think it's like an aquifer,
mm,
where once it gets overfilled and so on, the that part of the land floods, and it's in like historically it's been flooded like decades ago and so on, so it's a known fact, but I guess we weren't as um as like hard and fast about, not building in that zone and
mm,
that kind of stuff. So you're right. We do have to take a different approach in how we rebuild and, like how we set up infrastructure, more communication with those agencies that do that, like NEPA and so on. So yeah, I 100% agree with you. Like we have to build smarter and more resilient. Like I'm even thinking of even the cost of resorts now in, like, let's say just tourism industry. Like you have to build it in a way where they're hurricane proof, because I'm driving past the north coast in like last week and so on, and I'm seeing certain hotels are like the roofs are gone and so on, and that's just a testament to how you build the property itself, or how long has that property been there, have you done like upgrades and so on, do you have the hurricane roofing and that kind of stuff. So that's gonna take some commitment and investment.
yeah,
Um.
that
Oh yeah. Go ahead. Yeah.
that will definitely take some time. And I mean, just anecdotally, when you look at smaller weather events, how we have been able to deal with that, it has been suboptimal. We see that around Kingston in terms of flooding and what's going to happen in the future. And we have to sort of be more strict about how we approach physical infrastructure. And it's
Mm-hmm.
just disappointing in the sense that uh, that is where the boom should come from, right? Construction, road construction, building construction, and it has not really materialized the way that we want it to. But no,
True.
there are many new developments. There was a development that was spoken about in the West that homeowners bought into, and they've had to be dealing with these problems now. And you wonder, were they fully compliant with, um, building codes and standards and those things. So it's continual revision of standards and how we do things, and just taking the reality, the very stark reality of climate change into account. Um, how we do spatial planning is another thing, not just urban planning, rural planning as well. Jamaica is a mostly rural country. Mostly rural areas were affected with this hurricane. So how do we know factor those very small minutiae into building back better? In 10 years from now, it cannot look the same way that we did when Hurricane Melissa passed. It has to now be more resilient. And I know that that's probably, the buzzword, resilient physical infrastructure, but we can't really take it for granted because uh, just upgrading physical infrastructure prior to those fiscal policy actions that precipitated the massive increase in building new apartments. Everybody saw apartments going around. They had lowered the stamp duty and they got rid of transfer tax and what have you several years ago. That was supposed to be accompanied by a thrust towards building for the future, right? Because our infrastructure had been seriously crumbling prior to that. It was old, outdated, and now we see new buildings, but you don't want new buildings to now have old problems, right?
Mm-hmm.
So new buildings now must be exactly that. Not building for 2025, but 2050, 2055, right?
100%. Um, Before we wrap up, Keenan, so all our guests that we have on the podcast, we normally ask them about, companies that they like that are listed on the Jamaica Stock Exchange. Not saying you would invest in them per se or so on. But just companies that you see on the Jamaica Stock Exchange, you know about the business, maybe you like the business model, maybe you're a customer yourself, right? But I'd love for you to just highlight maybe like two, three companies that you like and just why that are listed on the Jamaica Stock Exchange. Whether it's, whether Hurricane Melissa has anything to do with these companies or not. Your choice.
Well, I mean, I'm not sure, given the constraints of working where I do, it might not be the most appropriate to specify a certain company that is also listed on the stock exchange. You know, but just to say that I think that you can't really go wrong with companies that are experienced, in terms of the length of time that they have been there on the stock exchange. And in terms of the sector, the sector doesn't really matter. I have always, whatever approach that I take is not necessarily, you know, profit maximizing. It's loss minimizing. So I, once the company's management teams and its fundamentals are in the right place, because if you have 100 companies in a very liquid, well, I should say a thin market in terms of its liquidity, then everybody is sort of rushing. The, the individual quality of each company probably matters less than to the market itself. So I could theoretically invest in anything, and I won't make a substantial loss. But I will just say that, given that the financial sector remains one of the more resilient ones, and it has one of the highest rates of productivity, as well as the other sectors like, electricity, water, finance, mining, manufacturing. So any conglomerate, I would probably lean towards financial and non-financial conglomerates. People know which companies those are on the stock exchange, because they have they're better placed in terms of risk diversification. So they don't overly concentrate in one specific area. And yes, Jamaica itself is a highly conglomerated environment, but um, those conglomerates have sort of stood the test of time, and they continue to expand even in this environment. So I would say, pick 2 or 3 or 4 companies that are financial or non-financial conglomerates, and just stick with them.
Okay, nice.
Okay, so we've been a bit, I feel like we've been a bit kind of doom and gloom for a bit. So I'm trying to look up, is there anything that you would like to leave the people with on like a positive note, like looking forward and yeah.
Now, I would just say, our capacity to really recover is not in question. And as a people, we have done it before, but we have done it differently. So we recover from crises more quickly than we had been able to in the past, right? It took us about, say, 14 years to recover from the crisis of the oil price shock in the 1970s. It took us another 11 years to recover from the global financial crisis. It took us 3 years to recover from COVID. So we're getting better at it. I made a post that said that, boy, we've had so many exogenous shocks over many years, but our learning curve has steepened. We have different people who are now tasked with the different skills of a new age to be able to navigate us, both in terms of the leadership and the population. So I'm always confident in the capacity of Jamaican people, individually and collectively, to just do what is required to get us back on sound footing. Christmas is coming up. I hope it's really a happy Christmas for a lot of people. I really
Yeah.
encourage us to, don't have to turn down the celebration necessarily, but we can involve more people. in our celebrations. Persons who really need it more now than ever, so that we can enter 2026 on a really positive note to sort of accelerate and press gas on this recovery. So people's resilience has been tested. Everybody's resilience looks different from each other, but we are a great people, and we have done things that are unprecedented before, and just now the clock has started on recovery from a Category 5 hurricane. How many people have had to recover from Category 5 hurricanes? Jamaica will now be in that very small subset, and let's just continue to show everybody that we are we're stronger than we know, and we can put another feather in our cap in terms of just our ability to do great things.
100%. Like I see even people like there's some videos that I see on social media now where even people are like cleaning up and so on, and they'll be like drinking a rum and just still joking about everything and so on. So I don't doubt that us as Jamaicans, like just our culture, our mindset is, we're strong. We're a very strong people. So yeah, thank you, Keenan. Actually, guys in the chat, send your love to Keenan. If you guys have anything else you want to say about this episode, if you liked it, if you really loved it, please hit that subscribe button. Right? If you just liked it, just hit the like button. We'll be fine with that. We'll be fine with that. But thank you again, Keenan, for coming on board. I think your voice is exactly what Jamaicans need, especially as we pivot from like hurricane recovery to like long-term resilience. Looking forward to an energizing conversation again. And I like that we left it on that note where we kind of leave the audience hopeful and armed with like practical insights about the road ahead. So thank you so much for coming on the show. Really appreciate it.
No, thank you both, Thaon and Matthew, for having me. I really enjoyed the relaxed atmosphere. It's not always like this. Usually in a suit and tie, and you have to worry
That's
about
so true.
those little things. So this is a nice part from that. I know your audience is always engaging as usual, and I hope that they will take something very valuable from it. And I'm looking forward to the next time that we get to talk.
Excellent.
Awesome.
All right. Thank you again, Keenan, and thank you to the limit breakers out there. And as always, stay limitless.
Peace.